I know you've probably heard me say this before, but it kind of never gets old. Jensen Huang needs to really, really stop messing around in politics because, NVIDIA beats top line, bottom line, beats on guidance, and it's down 2.44% this morning, falling about 5% from where it opened. And Tesla is only down 1.6%. I don't know. I don't, it's like, yeah, so the markets are wild and crazy again this morning. A lot of people blaming it on the tariff talk by the president, saying that the 25% tariffs will go into effect in Mexico and Canada, and that though he's going to add an additional 10% onto China. Obviously, the additional 10% onto China could roil things up with China a bit, and that might be why the Magnificent Seven is all trending down this morning. But what I can tell you for sure is that the volatility continues and the VIX, which had been softening a little this morning, is back up to around 19 and a half. So apparently, the folks who play the VIX believe that volatility is in for a bit. Volatility in general, not just in the stock market. It turns out that a little bit of historic reading would show that the president of the United States was talking a lot about tariffs at the beginning of his first term, and that the conversations he was having about tariffs were roiling markets as they are now. So I think, as I mentioned the other day, I think it's going to take us till the end of April, maybe a little longer than that, to figure out what's going on with Tesla's actual fundamentals, certainly in terms of car sales, in terms of the new Model Q or whatever it's going to be called. And I think it's going to be true for the tariffs and the Trump administration as well. I think people need to, if you're a trader, you need to figure out how to make your trades. If you're in for the long term, I continue to believe it's going to be just fine for Tesla. Tesla people that are heavily into Tesla, and probably for the overall market. I might have as high of a conviction rate on the fact that all of the things that Trump is doing are going to work out really good for the United States, as I am that the things that Elon has done for Tesla is going to work out really good for those who hold Tesla. Anyway, Holmore's blog this morning, Omar says, look, how many critics would have the courage to serve their country the way Elon is right now, facing constant scrutiny, attacks, and smears? I thought that was really, really, really a nice thing to say. And it's so true. Okay, you say, I'm going to go serve my country, and you're going to do it for free, and you're going to do it as honestly as anybody could possibly do it. Just go in there and see if you can find, graft and corruption and whatnot, and then start finding it in really significant ways, and then have vehicles and showrooms and being covered with graffiti. It's just sad. It's really sad. But you know what? Elon doesn't care. He really doesn't. And he's just, okay, whatever, you guys do what you're going to do. I'm going to finish the job. All right. This is from Ray this morning. Ray for Tesla. That's with a number 4. Ray for number 4, Tesla. He says the general consensus from Chinese FSD testers. FSD is meaning the Tesla type is extremely human-like, unlike any other Chinese system, and very confident. Driving is silk smooth, like a seasoned human driver. It's cautious to pedestrians and mopeds. Areas of improvement would be recognition of bus lanes, bike lanes, and traffic lights, picking correct lanes to go straight or turn left at intersections. So, very good report. That's nice to hear. Those are the initial reports coming out of China. By the way, another thing historically is that Tesla stock is normally down this time of year, and right now probably being exacerbated by questions and nervousness about Q1 being really slow. So anyway, I thought, instead of just, talking about the reasons here and there of why Tesla might be down right now or might be down, continuing down, I thought I'd make a list. I love lists. You know about me and lists. Anyway, so here's my list. Hang on now, hang on tight. I'm not going to spend a lot of time on this list. I'm just going to kind of read down it. Number 1, as a sentiment-driven stock, it went way past any reasonable relationship with reality from the street's point of view, certainly. And it has done this how many times before? Like over and over and over and over again. Number two, market sentiment was always super risk on. Was also. So the overall market sentiment was also super risk on a month ago. And the overall S&P PE was stretched to the breaking point. So we were just all this risk on. PE was like at 24. It's 24 times the S&P's forward earnings expectations. Anyway, number three, the first and second quarter have always shown sell-offs for Tesla the last 3 years. Not always, but the last 3 years, sell-offs in the first and second quarter. Number four, headlines around January sales fit the Elon politics narrative. So a nervous market that was turning to risk off starts selling the most vulnerable growth stocks. Number five, the market is now risk off. As I just mentioned, the VIX is just under 20. Number six, confusion about the tariffs and their impacts. Incorrect, scary headlines from the MSM about those tariffs. But just the fact that the tariffs are in the news every single day is certainly causing confusion and setting up opportunities for the market to be down, and that would tend to take all boats with it. Number seven, real concern about some brand issues in Europe. I agree. The brand issues in Europe are actual real and could last for a while. Number eight, concern about the $7,500 IRA credit going away. That's real and it could happen, or it could be in half, or it could be changed. Number nine, uncertainty about the Model Q and if or when it will be launched. That's certainly pulling on the stock. Number 10, concern that Elon has too much on his plate. His statement that he'll be completely absorbed by Doge for 4 months, that's certainly an issue. Number 11, anxiety about actual launch of robotaxi in Austin as the time ticks away and there are still very real issues with FSD. Will it come in June? Will it be delayed a month or 2 months? You don't know. We don't know. I don't know. Number 12, the ever-present competition for vehicles, especially in China, for FSD and for robots. So we're seeing, new cars coming out. We're seeing new robots coming out. We're seeing new energy storage products coming out. So every time another competitor comes out and shows some cleverness or some beauty or some good features or benefits or lower costs, that's always and those things have happened over the last 2 months. Definitely true. Uncertainty about number 13, the uncertainty about the ramp of the Juniper. How fast will it ramp in the United States? How fast will it ramp in Berlin? As usual, the China ramp seems to be going great, but there's some questions around Berlin and the two factories here in the United States. Uncertainty about the sales of Cybertruck. So we're not getting any information about that. No real confidence about whether Cybertruck sales are doing great or what's going on with Cybertruck sales. I think Cybertruck right now is not at the top of anybody's list of concerns or interest, but there's nothing there helping the stock. Number 15, the market is turning, might be headed to a correction. So obviously the market is down 2, 3, 4, or 5%, depending on which index you're talking about. We might be going to 10% on the S&P. Many people are suggesting that 10% correction is way overdue. Who would have been saying that for 4 months? Number 16, some people think that recession due to Doge could happen. The second part of that recession might be because of immigrants returning home, reducing that part of the economy. And I'm one of those. I'll talk about that later. 17, actual individual and institutional reductions in stock ownership due to politics. So there could be some actual people that are stopping, have sold their Tesla. We know that that's happening. In the margin, at least it's happening. So that would impact the stock. And then the perception, even maybe more important than the few that have actually sold their stock, there could be the perception of politics that would be impacting vehicle sales and stock ownership. So anyway, all of these weigh. By the way, you can add to my list, subtract from my list. Let me know in the comments below which one of those you think are really important or not important. But anyway, there are plenty of things that are on the other side. Maybe I'll make a list of all the reasons why Tesla stock should be up, like the new patent that just was revealed today on full self-driving, which was a patent that has been approved, is in effect, a very broad patent on full self-driving. I was not able to get into it enough to really give you a report, other than the fact that we do now have that patent. From Meyer Thacker this morning, he says, Elon has killed Tesla stock, tanking sales due to Elon's politics, brand damage. Well, he says, in reality, Tesla stock never should have run up plus 70% on the Trump hype in the first place. Only earnings drive permanent revaluations, and Trump has zero impact on that. At 290 now, we are finally back to fundamentals, he says. Wow, sometimes I don't agree with Meyer Thacker at all. Right now, for the last week or two, he and I have been on the same page almost 100%. Now, I do think that there's still $50 in future expectations and sentiment in the stock. I think 240, 230, 225 would probably be about the right price in terms of just fundamentals. Okay, but if the stock ran $100 tomorrow or $200 tomorrow, it wouldn't shock me, because that's the way Tesla rolls, is on sentiment about, in particular, when you've got the two biggest TAMs in the world that Tesla's about to conquer, you'd think that there would be some sentiment benefit to the stock, and $50 to me is low. I think it should be more than that, but I wouldn't be shocked again if it goes up a lot more. This is Randy Kirk, by the way, and I would love to have you stop and take a minute to push the like button. I want to tell you how much I appreciate you just for watching the shows. You're watching the shows is paying some of my bills. So thank you for that. Thank you for the way that the program has just increased and increased. I'm had a great January, very excellent February right now. I'm looking forward, hoping that we continue into March with these kind of numbers. In the meantime, if you like and subscribe and notify, those things all help. And the biggest help of all, of course, would be joining Patreon. That information is down below in the description. All right. Overall market is now risk off. This is important. You got to take that in consideration. The sentiment on the overall market has shifted. It's almost certainly, I believe we will have this correction. You've got the VIX 19.5, 19.6. I think we're going to have that correction. The fact that NVIDIA has failed to rally on those great results, just one more piece of evidence. The fact that it's down this morning after those great results. Market is also starting to bake in a greater risk of an actual recession. Again, I'll mention more about that in a minute. We may not get to an actual recession, but we're not going to have 2.5% GDP in the first and second quarter. I'm pretty sure of that. Bond yields are dropping for various reasons. Secretary Scott Bessent says he won't be adding to the bond sales. He will not be adding more. Whatever is on the schedule now, whatever the auctions that are coming up, whatever's on the list now, he's not going to be adding to those. That is causing bonds to go down a bit. Fed has said that they will not be selling more bonds. So the fact that the Fed is not in the business of selling off part of their portfolio right now, that is allowing bonds are drifting down because of that. Bond buyers are starting to believe Doge. They've seen it long enough. They now see the Republicans looking like they're going to pass that budget. They see the Republicans backing up Elon. They see the cabinet meeting yesterday where Elon got most of the time of the cabinet meeting, the very first cabinet meeting of the year. I think the bond market is beginning to believe Doge. I mean, we're down almost 50 basis points from the high, the recent high, just before Trump took over. We've got oil prices dropping. They normally drop in spring, but I believe that Trump is right about supply. He's going to bully pulpit the supply increase. And as that supply increases, well, prices will come down. You also have the war winding down in the Ukraine, and that could create a big spike in oil supply, and that would cause oil prices to come down. If we can get these oil prices down, and we can continue to get them down, they're under 70, that's good. We can continue to get the bond price down, get it under this 4.25, get it down to 3.75. That'll help business, that'll help mortgages, that'll help car sales. So that's what we're looking at right now. Those are the two biggies. Barron's, the money supply as measured by M2, which is the sum of all dollar bills, coins, and deposits held by the public at commercial banks and other institutions, as well as their balances in retail money market funds and more, is up. Data released by the Federal Reserve on Tuesday afternoon showed the total increase by 3.9% in the month of January to kick off 2025. It was the largest year-over-year gain since July 2022. But M2 has been showing an improvement for months. The gauge bottomed out in April of 2023 when it fell 4.63%. And that was the biggest decline since the data began being collected in 1959. January's report shows the 11th consecutive year-over-year increase. Now, a problem with the rebound is that it leaves M2 at 21.56 trillion. That's 6.1 trillion more than before the pandemic, levels not seen since mid-2022, the year the Fed began raising interest rates to rein in inflation. The abundance of cash in the economy could make it harder for the Fed to bring inflation back down to the bank's 2% target. However, I think this cash is going into savings because last month we saw earnings, we saw people with more income coming into their family coffers, but they didn't spend as much. So that could be a trend where people pull back right now because of some of the fear, some of their lack of confidence that we've seen in these surveys recently. All right, now in the week ending February 22nd, the advanced figure for seasonally adjusted initial claims of unemployment was 242,000. That's a big number. It's an increase of 22,000 from the previous week's revised level and way bigger than the expected 225. The previous week's level was revised up by 1,000. No, that's not significant. The 4-week moving average was 224, an increase of 8,500 from the week's revised average last week. The previous week's average was revised up by 250. That's not a big deal. But the total number of continued weeks claimed for benefits in all programs was 2,223,000, an increase of 4,696. However, it had been down last week, so now it's bounced back up. All of that 1 week, a nothing burger if it's just 1 week. Now, if we get another 250,000 next week, then that would be something that would be of interest. It would give us some indication that maybe there is a problem starting to occur in the employment area. All right, durable goods. This is also just out this morning. Durable goods orders in the U.S. rose by 3.1%. So that's good news to 286 billion, the U.S. Census Bureau said. The reading followed a 2.2% decrease last month and came in better than the market expectation of 2%. Excluding transportation, however, new orders were virtually unchanged. Excluding defense, new orders increased 3.5%. It was all about transportation equipment, which was also now been up for 2 consecutive months. That probably has to do with Boeing, most of all, rebounding. It certainly was true last month. I didn't see anything that gave an indication of what it was about this month, but I don't think it was car sales. I think it was other transportation, probably Boeing. All right. So I was hopeful for a minute that durables were starting to pick up, but it isn't about anybody going out and buying refrigerators. It's about people buying jet planes. The U.S. economy grew at an unrevised 2.3%, according to the second reading. I'm still thinking that we have a 50% chance of an outright recession, or at least a 1/4 dip under zero. Today's reporting really says it all, everything I've just been talking about. Interest rates could come down, though. The real question, and I think why the market is jittery as heck and why the VIX is up, is because the question is, will the drop in interest rates and the drop in employment and the drop in oil prices and maybe a drop in inflation, will all of these things happen fast enough to stimulate the economy in the other sectors like housing and housing and auto and the other places that have been knocked down now, durable goods? Will all of that start picking up in time to make up for the reduction in government spending on payroll and ancillary supplies, et cetera? Or will that cause the recession before we can get the economy going again? Some people would say, who cares? And that's kind of right. And it's kind of right for Tesla also. What happens right now and in the next couple of months is not very significant. It always pans out if the fundamentals are there. And I believe that, as I said earlier, the economy and the fundamentals with regard to Tesla are super solid. All right, breaking. In January 2025, the Midwest, South, and West experienced month-over-month losses in transactions of housing, with the most significant in the South and the Northeast. So we've got housing, what do you call it? Oh, yeah, I'm forgetting the word here. So according to NAR chief economist Lawrence Yun, it is unclear if the coldest January in 25 years contributed to fewer buyers in the market. And if so, you could expect greater sales activity in February to make up for it. However, it is evident that elevated home prices and higher mortgage rates strained affordability. So I've been saying for 3 days, 5 days now, all these different housing reports that came out about sales in January, about new home sales, about existing home sales. These are pending transactions. That was what the word I couldn't think of a minute ago. Pending transactions were down substantially, horribly, terribly. But that really, really cold winter in January, which is already generally the second slowest month of the year for the housing market, not really helpful in terms of long-term expectations. I think this will bounce back. It'll still be, it's the first quarter at least, probably the second quarter in housing still won't be great. Although if interest rates come down, if we get the 10-year treasury down to 3.75, that'll get mortgages that right now are around 6.7. We could be looking at mortgages in the 6.1, 6.2 area. That will stimulate home sales. So where are the markets now after all of that? Let's go ahead and take a look. Oops, 13.3248. Sheesh. So since we've been talking, how long are we talking? About 20 minutes. In the time that we've been talking, the Dow Jones. Well, let's talk about Tesla first. Tesla is back up 0.1%, but it's in the green. After being down like 2.5%, it's now back up. It was actually up and then down and then back up. And it looks like the Magnificent Seven is kind of doing that, but NVIDIA is still down 3.95%. I'm telling you, I don't know what Jensen's doing wrong, but I'm telling you, the board of directors should fire the guy. I mean, down 3.75 after those numbers yesterday. Apple is, okay, so Tesla's up 0.31% right now. We've got the Dow up 0.78%, NASDAQ down 0.62. By the way, it started up quite nicely this morning, came way down, getting closer to the green, but now falling away from that. S&P just went back into the green, 0.02%. So yeah, a lot of volatility, massive amounts. It's really, and directionless. So you've got, although I don't know, things are starting to trend together. So we're kind of seeing a move back to the green over the entire Mag 7, over the NASDAQ. The Dow, which has never dropped into the red, is now moving kind of upward. So in general, things are kind of going in a positive direction right now. And with the Cathie Woods, it's like just mixed. It looks like Christmas. Red, green, red, green, red, green. No, just very directionless this morning. Okay, let's go ahead. I think I gave you everything you needed to know. All right, let's go ahead to the bonds. There we go. The bond market, we've got Yeah, still up 3.8. Oh, now, okay, up 4 basis points this morning, 4.287. Not what I want to see, not what you want to see, probably. The 2-year up 3.2, also basis points. The 1 month up 0.4 of a basis point. And again, not the right direction. Would like to see that reverse before the end of the day. I will see what happens. Okay, oil. The bonds might be coming up a little bit. The yields might be coming up a little bit. Partially, I think it would be profit taking. Partially, it might be that oil, with all the talk about the tariffs and also the Venezuela yesterday, Trump eliminated the contract that Chevron, the special deal that Chevron had on oil out of Venezuela that Biden had put in place. And so the price of oil did go up a bit. We're back over 70 on Texas Intermediate, up $1.56 this morning, and that could be impacting the bond prices because it would suggest that inflation is not going in the right direction. And so that's probably part of what's going on. Natural gas back over $4. It's been flirting up and down around $4 for days, up 1.21% this morning. Gold down 41, well under 2,900 now. Larry and I are sad, not because we're invested in gold, but because we were predicting 29, we were predicting 3,000, and it's not going the right direction right now. Silver down 1.45% at 31.82, and copper up a little bit, up 0.43 at $4.60. By the way, hundreds of federal workers are being promoted daily in the DC right now as a result of the Doge activities. When they are finding excellence, they're promoting people. There you go. I just saw that headline. Thought I'd share that with you. The dollar up a bit, but it's mixed. Bitcoin finally recovering. There's a little bottom fishing here. 85,825 is where we're sitting this morning, but it is up 2.45. Interesting that it is up when everything else is kind of in a mess. Okay, yesterday, Brian Wong hit it out of the park again, as he does so often, talking about what is the Model Q really? And so we went through. He had a discussion. He took his big brain and he put his big brain into Grok and asked Grok, hey, based on my observations, what do you think? And Grok came back. They had a little discussion, a little back and forth, and they came up with a solution of what the Model Q is. Obviously, we don't know what the Model Q is, but that's his speculation. Well worth a look. I'll put that card up, and you might want to take a look at that. We will have regular programming. Well, let's see. Today is Thursday. No, not regular program. So Jeff Lutz couldn't come on last night, so he's coming on tonight. And then it'll be Cern Basher at 7:45. So come on back for both of those. As always, love to have you like, subscribe, and join Patreon. And oh yeah, let's take one last look just for fun. Tesla now up 0.48, $1.41, up, down, but right now heading into the green and trending up and to the right. It has been great, as always, talking to you.